Good morning, everybody. It's the 31st of August. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Thank God you're back, mate.
Has it been a struggle, has it?
You know what I'm like with technology.
Oh,
Almost like
smashing
an
it.
Ian.
Oh, no, not that bad.
I felt a little bit like that. I felt like a bit of an Ian flapping about with technology. Hello, Ian.
Oh, Ian.
But it wasn't too bad. Um, yeah, no, overall, by the end of the week, I was sort of getting my head around it a little bit. So
Good.
hopefully I haven't left too much of a mess for you to clear up.
No, I'm sure it's absolutely fine. I've updated as much as I can this morning. I haven't gone through any charts over the last few weeks or so. So
No, nice fresh
you're
look
doing a
there.
little bit on the fly. I do need to get them redrawn, which I'll do today, but try and make do with what I can see at the moment, and I guess let's get stuck into it. So news-wise, um, what sort of have been the main sort of topics of what you've been talking about, Steve? The Afghan situation, has that featured?
Yeah,
Or
there's a little bit of that. Not a great deal on the news side. It's really was about Jackson Hole,
yeah,
all focused on that for the whole week. Really, just everything seemed to tread water, and then we got it. We got that over the weekend. Stock markets have seemed to like it, and yeah, I sort of like didn't sort of like really see where what happened to the dollar. Dollar didn't like it, did it?
well,
As
it broke
much.
out by looks of things above 93.43 and then just died. But
Yeah.
we'll come on to that, I guess, in a moment. In terms of the other news I saw, was obviously about the hurricane that hit the US, which was the second most intense hurricane ever to hit Louisiana. Hopefully, people are safe and well. But it looks like that's been downgraded now, but could potentially be more rain to come. So not sure what effect that will have on the US. Doesn't
Mm.
you know, Nothing really seems to stop those markets from going up. They hit
No,
all-time
no.
highs again yesterday. In situations like this, we've seen it before, where obviously, when hurricanes hit, they're catastrophic. But in terms of the sort of rebuild effort, it obviously helps the economy,
Mm.
and pushes things higher. But yeah, I guess we'll have to wait and see. Okay, so in the wake of sort of Jackson Hole, lead us towards the path of tapering without necessarily spooking markets. It looks to be the case, so that's obviously a good thing. I guess then we can get stuck into some charts. Where have you sort of been focusing your attention over the last few days, Steve, on the market front?
Yeah, well, I mean, I'd sort of like there wasn't really a lot going on the cryptos, so I suppose we can dive into cryptos to start with, just get that out of the way. It's at some sort of pretty funky levels at the moment, really sort of like toying with this just above the 50,000 level in Bitcoin. And we saw the high around about 50,500, 600. And again, we made a bit of an attempt higher to try and break it back above 50,000. That was, I think, that was on Saturday, but failed to do so. And we've seen the prices sell off yesterday, although there's a little bit of a recovery today. We got a couple of levels to watch, really. It has to break that 50,500. I've just done a video on it. You can catch it on YouTube soon. Or this support coming in at 46,300. Yeah, it feels a little bit tied up here. But Cardano is really sort of pushing the boat out. That's made new all-time highs, broke above the 246 level, and got up to $3. So we've consolidated a little bit, potential for a double top formation. However, it still feels like it's got enough momentum to really sort of try and test further. A bit of an impulsive move higher. If it is an impulsive move, we're looking for the fifth and final wave to sort of like come from this after this consolidation. So maybe looking at 350, 360 to target in Cardano. That's the sort of like one I've been really talking about last week. On the oil side of things, been under pressure, but we have reacted from the 20th of August. We can see the nice reaction higher, but again, it's running out of steam. And we've got this downward trending resistance. We've got 3 touch points here, so potential for a fourth. And we've also got this upward supporting line, which will be resistance now once we get there. So a lot of headwind really between the $70 and $70.50 on the crude oil side of things. And if we look at Brent, which we're covering now on the intraday markets. That's a potential trend line because there's only 2 points so far, but that comes in around about $73, obviously trading at premium to the WTI crude oil. Gold has made a bit of a recovery. Obviously, we've had this volatility spike that we saw on the Sunday night, which made its way down to 1675. I don't know if you were here for that or not, Joe. I think you were, weren't you, that week?
Yeah,
Pretty
I
sure
think
you were.
so.
And then we've seen the recovery higher, and it has left obviously the longer term charts with some sort of like pretty strong looking candles. Really, I could call it a bullish hammer, although you'd prefer to see it right at the bottom. But it's had that same sort of reaction. So we could be looking for the second positive monthly close if we can manage to sort of like hold on to these levels this week. So a little bit of a way to go. We're still in that channel formation, looking to break higher, but that's not for a while now. That's a long-term chart. So yeah, gold really using this 1800 level as a bit of a pivot level. We can see the congestion we saw trading either side of 1800 all the way back here. And we broke down lower, the reaction higher, and even last week we saw a break to the 1780, so it put in a higher low, and again on the 27th of August we did the same sort of thing, really sort of faked out to the downside before pushing higher. We broke above the 1810 level. 1832 to 34 is the next target, trading around 1815 now. So looking pretty good on the gold side of things. And as Joe said, the indices looking strong. FTSE is above the downward trending resistance line. We had a bit of a poke higher this morning up to 71.80. Really, again, with this, we've seen this 71 level as being a bit pivotal, and we're managing to hold above there now. Spike up this morning has reversed quite sharply, and that's been, look at the hourly chart, that's been in the last couple of hours. We formed an evening star formation there. So if we do get a break of 71.38, could put the pressure on, maybe take us down to the low 7100s. But still, I wouldn't bet against the indices at the moment. They seem to bounce back quite aggressively. DAX has kicked on a bit better, actually. Same sort of formations in the DAX. We've got this downward trending resistance line, which held really nicely until yesterday, and then we pushed above it, and we've broken up quite strongly, even sort of like this is the highest we've been since the 13th of August. So really looking quite positive there, and the 15,940 resistance will form some sort of support, and also the support will come in from this downward trending resistance line support as well. So that'll be all the way down here. On the Dow, very close to all-time highs. We were looking to sell a break on Friday, but it didn't quite get there, and prices have kicked higher. So all-time highs in the Dow, 35,630, and we are capped at the moment around about the 35,500. So a nice round psychological level. We've seen 3 or 4 efforts fail here, so really looking to get a break of there to kick on and take out the all-time highs again. Otherwise, we'll form a really nice double top, triple top formation. We need to get a break of 35,172 to confirm that later on this afternoon. Again, on the Nasdaq side of things, we were looking at selling a break, or was it? No, we actually got taken out. This was stopped out the Nasdaq on Friday. Looking to sell into a rally that didn't look as strong, around about the 15,400, which was the all-time high. And it took it out and kicked on really nicely. We've been up to 15,681, even as over the last 4 hours. So that's new all-time highs in there. So again, we can figure out trying to sell that bad boy. The S&Ps, we were looking to sell a break. Again, it didn't really get the chance. It broke up above the downward trending resistance, which had formed on the short-term chart, and it's kicked on really nicely. We do have, what's this line here? This is upward trending resistance. You don't get it often here, formed by these 3 points here, although the middle point hasn't really touched the line, but it should provide some sort of resistance, but really struggling to at the moment. It's looking quite strong and punchy. If we do get a break back below the 4,525, then maybe a little bit of consolidation, but again, dip buying seems to be the way forward in all of these indices. Aussie 200 a little bit more under pressure up until this morning, and we took out the resistance from the 24th. So looking again positive there. China isn't, so China's still under huge pressure. Really needs to see a break of 14,500. If we do see that break again, can't believe we've actually retested that level. So for me, 14,500 is a bit of a line of sand now. If we'll get a real disparity between the US indices and the Forex, China, Hang and Nikkei. Yeah, forming a bit of positive candle over the last 4 hours, but I wouldn't buy too much into that. Oh, that one worked nicely. Yeah, so you've seen that's a bullish engulfing candle over the last 4 hours, and we've got back above resistance, this downward trend resistance, 1, 2, 3, 4, 5, half a dozen points really it's touched, and we've closed above it on the 5 o'clock to 9 o'clock candle. So looks quite positive for Hang Seng, maybe a little bit of a correction higher, but will still remain under pressure. The Nikkei, again, we got this this downward sloping resistance line that comes in at 28,500, but before that we've got 20,300 resistance on a couple of occasions. So again, I'd be looking to sell more into the Asian Pacific indices, but the Dow, Nasdaq, and S&Ps, you can't stand in front of that train.
Nice.
I see a lot more people have turned up for this one, Joe, because they know you're back.
Okay, well, I'm going to look at some FX markets on the fly a bit because I haven't had a chance to redo my charts, and obviously they're a little bit out of date now, given that I've been away for 10 days. But before I went away, all eyes was on this 93.43 level for the dollar index. I was hoping that we'd see a break above that level at some point to complete what would then be quite a decent looking double bottom pattern on the weekly charts. Let's just see if I can remove these. Get off. Forgot how to use TradingView. Yeah, this is the double bottom that I was looking at on the weekly chart. Needed to overcome this 93.43 level. On a weekly basis, we didn't see a close above that level. On the daily candles, we did, and we saw it there on the 19th of August. But the sellers stepped in pretty quickly after that to send it lower. Sorry, this is the daily chart. And we formed this sort of, shooting star sort of candle above that resistance level.
Evening star, yeah.
Or evening star, and then we've moved lower, and there's no sign of that slowing at the moment. So I guess that is appetite for risk, as we've seen on the indices. They're all looking pretty good as well, and obviously the soothing tones of Jerome Powell at Jackson Hole have helped. And the dollar's being shunned as a result of that. So at the moment, I think we will probably see some more chop. I don't see there being any sort of major moves in either direction at the moment, but I do believe eventually that 93.43 level will be taken out, but it certainly doesn't look like it's going to happen anytime soon. So if we look at how that's impacted euro US dollar, I've been talking for ages about this head and shoulders top pattern, and I would have sort of put a large bet on it moving lower on the break of that big support level there at 117.04, in line with this break of the highs, the 93.43 level on the dollar index. But there was absolutely no follow through. The volume was higher as well on that break. Certainly not massive, but it certainly was higher than it had been. But the buyers have stepped back in and pushing it higher. So a false breakdown. When you get these sort of big patterns and they look too good to be true, they often don't work out, and that's the reality of it. So that is moving higher for now, and looks pretty strong. So I wouldn't be backing against a continuation and correction higher on the euro dollar for now. I think the next level to look at would be up there at 119.08. And we'll have to just wait and see. We've got non-farm payrolls later this week, and we've got some consumer confidence data out today. So there's plenty to keep an eye on to potentially move these markets in the meantime. Looking at some of the riskier assets, Aussie, for instance, we've seen this weakness in the dollar, and there's been a big old move to the upside in Aussie versus the US dollar. Head and shoulders pattern completed quite some time ago, back in July. Got a measured move target down here at 70.57. We've stopped just in front of that, and we've continued this fairly aggressive pump to the upside. So whether that will fail anytime soon or not, I'm not sure. Certainly the underlying trend remains bearish, so I wouldn't be surprised if that does fizzle out at some point. But when that is, I'm not entirely sure. I need to redraw these charts really. But anything you've seen on the FX front, Steve, that while I was away that caught your eye at all? Any particular
No,
big
just on the
levels in
dollar.
markets?
Yeah, I was just going to sort of like say on the dollar index, I saw this. I was looking at this upward trending support line, and we're clearly broken back down below it.
Yeah,
Obviously, looking at this evening star formation that you picked up, and thought we'd maybe stall at support here, bounce back higher, but it has broken down. But it's only just got as far as the 13th and the 16th of August lows. But again, that's sort of like, it seems to be quite a decent level, even going all the way back to here. We saw a spike higher. So I think this will be this could be a sort of like a sort of like last chance saloon for the dollar. Otherwise, we look like we could be heading a little bit lower,
yeah,
maybe over the coming week. So yeah, real test of dollar nerve at the moment. Dollar yen for me actually was the one that it's obviously not a great inverse head and shoulders, because you'd like to see them at the bottom of a trend, but obviously when they happen within a sort of like sideways formation, they tend to have this play out the same way. Really, it's sort of like I found quite a nice. I was going by dollar yen on the gun to head, and it worked okay. It wasn't too bad last week, but it is, and this seems to have held up better than other dollar pairs. So maybe more about yen weakness, I suppose. Yeah,
is that
so
the
that's
ATR you've
again.
got on there?
Yeah, that's the ATR. Yeah, so that's like slowing
It
down
just
down to
died.
50 points. Yeah, so a little bit potential for, we're building up for maybe a bit of a volatile period to get this sort of kicking off again.
Yeah,
But yeah,
month end as
pretty
well. Don't
quiet
forget,
sideways.
last trading day of the month.
Yeah, yeah. So a new month tomorrow, 1st of September. School holidays over. A few traders coming back from driving the kids mad, and then maybe we'll see some action. September, October, November, always a pretty good for technical results as far as we're concerned. We seem to
Yeah,
have done a
certainly.
lot better over that time period, looking back over the last 6-7 years. So yeah, fingers crossed we get a bit of volatility with a little bit of trend, and we should see some better results coming in on the gun to head as well.
Yeah, cool. Okay, well, nice segue into that then, Steve. So obviously I've been off for a few days, and in my absence, you have you're down 0.06R.
Yeah,
So
it felt better than that because I hit target on dollar yen on one of those days.
yeah,
But yeah, gave it back
yeah,
over the
dollar
last
yen
two.
looks to have been a bit of the theme there for you. Gold and dollar yen.
Yeah, yeah. Um, Yeah, sort of. It felt like there was nothing else really to go at. It felt, around about 8 or 9 o'clock. It's always a little bit of a funny time to do this. I think we may have to bring it forward to about 8 o'clock, Joe, to sort of like really try and capture that indice move
Yeah,
that
the
we always
European
see
open
around eight
move.
o'clock.
Yeah,
European sentiment wave, I think it was called once. Um, yeah, so yeah, we'll talk about that in a bit more depth. But yeah, apart from them two products, I haven't updated all this.
oh,
So
I've done that. It's all up to
oh, have you
date.
done that?
Yeah, so it's pretty flat as you'd expect, and has been for a number of months really, as we've sort of struggled to get any sort of real volatility or follow through on these markets. So when we first started, that was a period between sort of November through to the summer where things were pretty good, but
What
throughout
was the
most of
spike
this
last
year,
year, Joe? What was that?
this one.
Yeah, what period of time was that?
September to October.
There we go. Here we go again then. It's an opportunity. We've got to step into it. We've got to take it on, take the bull by the horns
Got to be
tomorrow.
aggressive.
We wait till tomorrow.
Yeah, well, we'll just tread water today then. What have you got? Anything you fancy?
No, not really. No. Gold feels like right in the middle. 1815 could slide either way. Crude oil looks like it's going to sort of like push hard to test this level, and obviously with the outfall from the hurricane, was it Ida?
Ida, yeah.
Yeah, Hurricane Ida. Then I'm not sure about that. The only thing, I suppose, I mean, I might go for DAX actually. It's not ideal to be buying it right now. I'd rather buy the dip, maybe the pullback, obviously on the hourly chart, maybe a pullback to around about the 15,850 to 880. That's where I'd rather get in. But we've broken above here. It has had a bit of a pullback from the highs, 15,985. Feels like we're going to challenge the 16,000 today. So maybe I'll just really have a little bit of a punt on this. It's going to be a bit tricky to try and get some decent risk reward out of it because I'll have to very tricky indeed. In fact, I might have to go to a shorter time frame to get some decent risk reward out of this bad boy. Let me see what the Ichimoku cloud is telling me. Yeah, now I'm sort of regretting taking this.
You can change your
Even,
mind.
I mean, yeah, feels like it stops. Yeah, have you got one? Because I might change my mind on this.
The only thing I can see where there might be some value, and I'm purely looking at hourly charts here just to try and scrape something together. The New Zealand dollar currencies have all had big moves higher. This is the hourly chart. Apologies for a bit of a mess, but what I've got drawn here is the ATR bands, which is something I often use to try and indicate, where the sort of value is on a daily basis. Looking back to the left-hand side, the last time we were up at this level was back in at the beginning of August, and obviously we failed there. We're at this level again. We're above the typical range, typical average true range over the last 20 periods. So I think that represents a reasonable opportunity to try and fade it with quite a tight stop. So going to give that a 20 tick stop, setting it now at 88.80. And then just going to target a move back to these sort of lows around here, 88.15. Let's go. So looking for 3.2R on that today.
Okay, mate.
Very speculative.
Yeah, I'm going to have a little look at the ATR bands as well. We've just hit the bottom on the Euro New Zealand dollar. So, and we've also posted a nice bullish hammer there. So I quite like that, using a couple of different indicators, putting them together and seeing what we come up with. We want to go for something like that, around about a 2.5 to 1 risk reward. Getting long at 167.62. Yeah, that I feel that's quite a good one. 2.67 R it is. It's getting long of Euro New Zealand dollar 167.62, just based on this couple of hitting the ATR and bouncing off it, forming a bullish hammer. So quite nice. Targeting an 80-point move higher, 30-point stop, which will be just below the recent swing low.
Nice. Good luck.
Cheers.
Okay, so day ahead, we've got Eurozone inflation at 10 a.m. Prices expected to rise 2.5% year on year and stay flat month on month, while the core CPI is expected to rise 1.1% year on year. 2:45, we've got the US Chicago PMI. The index is expected to fall to 69.8, and then at 3 p.m. we have US consumer confidence. So, pretty much straight back into it. Following the extended weekend in the UK, with some key data points today. So we'll see what that brings to the markets later on. And obviously, being last trading day of the month as well, there could be some positioning in markets that cause some strange looking price action. So we will follow up with that tomorrow.
Brilliant.
Cool. Glad to be back, and we will see you all tomorrow.
Cheers.
Bye bye.